The land of the rising sun has hit a bit of a snag. Japan, a global economic powerhouse, is experiencing an unexpected economic slowdown. Now, you might be wondering, Jim, why should I care about what's happening all the way over in Japan? Here's the thing. Global markets are like a giant game of dominoes. When one piece falls, it can trigger a chain reaction across the globe. And folks, Japan's slowdown is sending ripples all the way to Wall Street. This isn't about some insignificant blip in the data. We're talking about the world's third largest economy sputtering. And when an economy the size of Japan catches a cold, the rest of the world better grab a blanket. This slowdown impacts everything from currency exchange rates to the cost of goods. And yes, even the performance of your beloved stocks right here in the good old US of A. Now, I'm not one to sugarcoat things. This is serious stuff, folks. But before you go running for the hills and selling off your entire portfolio, take a deep breath. Remember, knowledge is power. By understanding what's happening in Japan and how it impacts the global economic landscape, you can make informed decisions about your investments and protect your hard-earned money. So, buckle up, grab your coffee, and let's dive into the nitty-gritty of Japan's economic slowdown and what it means for you. Trust me, after reading this, you'll be armed with the knowledge you need to navigate this market turbulence like a pro. Let's break down exactly what's happening in Japan. In the simplest terms, their economy isn't growing as fast as everyone expected. Think of it like a car that's supposed to be speeding down the highway, but instead is stuck in second gear. It's moving, but not nearly as quickly as it should be. There are a few culprits behind this slowdown. One major factor is weak consumer spending. The Japanese people just aren't buying as much stuff, which is a big problem because consumer spending is a key driver of economic growth. Add to that a stronger yen, making Japanese exports more expensive, and you have a recipe for economic sluggishness. Now, you might be thinking, okay, so Japan's economy is a bit sluggish. Why is everyone freaking out? Well, here's the thing. Japan plays a major role in the global economy. They're a major exporter and importer, and their economic performance has a ripple effect on other countries, including the United States. When Japan's economy slows down, it can impact everything from the demand for U.S. goods and services to the performance of U.S. companies operating in Japan. It's all interconnected, folks, like a giant economic web. How does Japan's economic slowdown directly affect your investment portfolio? Well, for starters, it can lead to increased volatility in the stock market. Remember those dominoes we talked about? When one market stumbles, it can send shockwaves through others, causing stock prices to fluctuate wildly. A slowdown in Japan can also impact U.S. companies that do business there. If Japanese consumers tighten their belts, it can hurt the bottom line of U.S. companies that rely on Japanese sales. And as we all know, when company profits take a hit, stock prices often follow suit. But hold on, there's more. Japan's economic woes can also impact currency exchange rates. A weaker Japanese yen can make U.S. exports more expensive in Japan, hurting American businesses. It's a complicated web, but the bottom line is this. What happens in Japan doesn't stay in Japan. It can impact your investments right here at home. Don't panic. Now, I know what you're thinking. This sounds scary. Should I be selling all my stocks and hiding my money under the mattress? Hold your horses, folks. Panic is never a sound investment strategy. Remember, market volatility is a part of the game. The key is to stay calm, stay informed, and stay focused on your long-term investment goals. So, what should you do? First and foremost, don't make any rash decisions. This is not the time to be making emotional trades based on fear or speculation. Instead, take a deep breath and review your investment portfolio. Is it still aligned with your risk tolerance and long-term goals? If not, make adjustments accordingly. Diversification is your best friend in times of market uncertainty. Make sure your portfolio isn't overly concentrated in any one sector or region, including Japan. A well-diversified portfolio can help cushion the blow from market swings and reduce your overall risk. Here's the deal, folks. Japan's economic slowdown is a wake-up call. It reminds us that we live in an interconnected world where events on one side of the globe can have a ripple effect on the other. So, while Japan is grabbing headlines right now, it's crucial to stay informed about economic developments around the world. Keep an eye on major economies like China, the Eurozone, and of course the US. Pay attention to economic indicators like GDP growth, inflation rates, and interest rate policies. The more you understand about the global economic landscape, the better equipped you'll be to make informed investment decisions. Remember, knowledge is power. Don't rely on headlines or rumors to guide your investment strategy. Do your research, consult with a financial advisor, and stay informed about the factors that can impact your investments. Now, before you start thinking the sky is falling, remember this. Market volatility can also create opportunities for savvy investors. While some sectors may struggle in the face of Japan's slowdown, others may actually benefit. For example, sectors that are less reliant on global trade, such as healthcare, consumer staples, and utilities, may offer some stability during times of uncertainty. Additionally, sectors that benefit from a weaker US dollar, such as technology and manufacturing, could see increased demand for their products and services. The key is to be selective and strategic. Don't just blindly jump into a sector because it's perceived as safe or hot. Do your research, analyze individual companies, and look for those with strong fundamentals and a solid track record of growth. Let's recap. Japan's economic slowdown is a significant event that has the potential to impact global markets, including our own. But remember, market volatility is a natural part of investing. The key is to stay informed, stay calm, and stay focused on your long-term investment goals. Don't panic sell based on fear or speculation. Instead, take this opportunity to review your investment portfolio, ensure it's properly diversified, and make any necessary adjustments based on your individual risk tolerance and financial goals. Remember, knowledge is power. The more you understand about the global economy and the factors that can impact your investments, the better equipped you'll be to navigate market turbulence and achieve your financial goals. Like and subscribe to stay informed, stay engaged, and most importantly, stay invested.